Hey, how's it going, everyone? I'm going to go over the daily plan as well as the live market commentary I provided here through StockTwits. I post my daily plan every day prior to open. This is my StockTwits handle. I'll leave a link in the description. And I will also, or I would also like to thank everyone here on the YouTube. We hit 140 subscribers. It really does mean a lot to me. So thank you guys for those who have been subscribing and leaving thumbs up. So let's get into the day. I started here on StockTwits at 6 a.m. and I said, looking at the overnight TPO, there are a few things we could take going into the cash session. Yes, we'll cover some in recap. So, what are we looking at? This is a TPO chart or a time price opportunity chart. So, time price opportunity, this chart is looking at time, not volume. Here we do have the volume by price to the side just to get a side-by-side look, but TPO charts have to do with time, not volume. So what does this do for us? Why do we use this? This helps us visualize the current market auction and what is going on in it. So what are we looking at? We're looking at distributions. Do we have a D shape? Do we have a capital B shape, a lowercase b, a P shape? These are all things that we could take. Do we have, we're looking also at our highs and our lows. Do we have poor highs or excess? They're all things that signal to us different things in the market auction and what's going on. Are we on aggressive moves down or up? Are we leaving structure behind us that is going to need to be cleaned in the future? All things that help us build confluence between other tools that we use. Obviously in the room we talk about footprint, we use extensively, as well as even clean candlestick charts. There are a lot of things that we could take from candlestick charts. So between all these tools we could build confluence, and that is how I create my daily plans. What do we have next? So taking a look at the transacted volume on the daily frame, what can we take from it? We'll cover a bit in the daily recap later. Unfortunately, I don't have this screenshot saved, so I'll zoom in here. And what are we looking at here? This is a daily footprint. If you're unfamiliar with footprint, linked to the home on the YouTube channel, I have a quick video that will show you guys how to read this. But what we are looking at is the transacted volume. These red volume nodes are selling imbalances, and these green volume nodes are buying imbalances. So what do we see on the daily going into open? Let me refresh my memory. I believe this was, 6:23 a.m. And what do we see? Well, looking at the overnight session so far at this point, I think we all see a D-shaped profile. So each different volume profile or market profile, depending on what we are looking at, comes with different rules. So we know what to expect. We know that FOMC minutes is going to be released today at 2 p.m. market time. As of time of recording, it is 12:24. So we'll touch on it in a little bit, but I said to don't be surprised if we continue, once we open the session, if we continue this D-shaped profile. We're trading due to where we are trading. We've been speaking about over the past 2 weeks or so. We know that this is a balance, a multi-day balance in the market where we're trading into. We know price is happy to trade here, so it should be no surprise why we're seeing the distribution that we are. Is there anything else? Let me fix this now. Alright, so moving on now. This was the first time since I started posting on StockTwits. It's not something rare or anything, but this is the first time that I was going to reuse the same daily plan over 2 different days, and my reasoning, oh goodness, nope. My reasoning for this was that we did not interact with the sell zones from yesterday's daily plan. We got this long here, so what we are seeing here is yesterday's daily plan. And I didn't have this labeled as a buy zone because we needed to monitor the tape down here. As we talk about in the room, areas such as this area is what provides us the best risk to reward setups. And yesterday we were able to catch the 40 or 50 points rip from here. I myself did not catch the whole move, full disclosure, but I talked about why. I shared my executions here on the YouTube as well. I played it safe, but there were people in the room who definitely maximized much more of this move compared to me. But going into today, we had the same crucial pivot area that we have in the current market structure that could provide longs. But the reason I didn't have it labeled is because we needed to watch it in real time to see that we had a bid. What do I mean by that? We're looking at our larger time frame footprints. Are we seeing a B-shaped profile on our 4-hour, on our daily? Are buyers doing what they have to do to reverse price back up? And if we do not see this on our larger time frames, the footprint is telling us not to get in a long. The footprint helps us from taking many paper cuts that we would take if we were just trading off of normal candlesticks, right? So let's move on here. Sorry, someone's typing in the room, and I'm just seeing what they're saying. What do you have next? So this is what a little peek into the room looks like. So obviously I'm posting my daily plans every day on the StockTwits, or StockTwits, not the StockTwits, I sound so old. But I am breaking up the footprint, I'm breaking up the TPO, and I have these annotated screenshots every day for everyone in the room. Exactly what I am looking at, what I am deriving from it, and how I'm using this stuff to then make my daily plan. Not only the footprint, but we'll look at the TPO, we'll look at clean candlestick charts, all of that stuff. And this is something I said prior to open. I believe it was around 7:30, I guess 8 o'clock, but I was pointing out, looking at the 4-hour chart. High volume area over here, and this candle closed above a majority of this high volume area. So what does that mean? Well, we've spoken about it plenty of times, but when a candle closes towards the highs or the lows, in this case the highs, with the majority of the volume underneath it, all those people who are selling short in there are trapped. So they will start stopping out, they'll create fuel for an up move, but as us traders know, sometimes we don't respect that. Now, as a professional trader doing that every day, that is something that you will have to remove from your trading. But that doesn't mean that everyone is perfect. So what does this mean for us? Once this next 4-hour candle opens, we're going to look for a retracement into this high volume area, and all the people who didn't stop out are going to be thanking the heavens that they could now exit their trade closer or at their break even, and they will create a floor or support for us to take another leg up. So what I was posting here was showing that this, to keep an eye for this, I said now we see if these trapped sellers provide a temporary floor for this session. The session meaning the overnight session prior to New York Open. And we could see down here, that's exactly what happened. We got this pullback. This buying imbalance is moving up. We have a zero print signaling exhaustion here. And we had a, I believe it was 15 point, bounce, or if you're trading the E-mini, that's $750 per contract. So just reading the order flow, there's so much that we could take from the current market auction. I already thanked you guys. It does mean a lot when you guys show your support through subscribing and thumbs up. So at 9 a.m., I believe I touched on this in this video. If not, I have these annotated slides that I post, not slides, but screenshots in the Discord of what I am looking at for the tools, what I'm deriving from it, and whatnot. But on top of that, at 9 a.m. every day before market open, I will share screens on the Discord, hop on mic, and run through the daily plan as well. Because some people learn better through annotated things, such as myself. I prefer that, so I could see it in front of me. But some people prefer video formats or live, as we do. So I do a mix of both to try and help everyone, right? So what I do here is I'll run through the daily plans and say, this is a sell zone. This is a very cautious sell zone. This is why we are considering this as an inflection point in the market. These are our tools. This is a confluence we have lined up. This one is a very cautious sell zone because X, Y, Z. Hopefully you guys get the point. So after I skipped over this. When I posted the daily plan, let's read what I said. I said, so I posted it just before 8 o'clock, and I said, unless the news at 8:30 changes anything, I'm looking at the exact same thing as yesterday. We may look to be buyers a little bit lower than labeled from yesterday's daily plan, right over here. So we may look to be buyers below, a little bit below, but the tape is going to have to be monitored at open, as I said. We discussed the tape live in the room together. I'm always providing up-to-date live market commentary in the room, posting screenshots and whatnot. And as I said, I caught a long. I got a little bit of the move. Actually, two other members in the room maximized this trade much better than I did. And they were able to catch this long. But FOMC minutes at 2 today, not saying it will happen, but do not surprise if we see sleepy price action before then, right? And let me pull up I have a picture here, 1 second. Not that one. Oh, I'm lying, I don't have a screenshot. Let me, 1 second. Sorry about that. Here we are. So I posted today, 7:46, as you could see in the room. FYI to all, FOMC minutes today. Not saying we do, but do not be surprised if we see continuation of how we've been trading this overnight session. Think D profile. So of course we just looked at the overnight TPO and the volume distribution, and we saw a D-shaped profile. And clearly, as I said, don't be surprised if we see this into open. Now discussed in the room, I touch on it in our introductory series in the room. We have certain rules regarding each of the different volume or market profiles that we encounter, because obviously they all mean different things, so that tells us what the market is doing and why. So let's continue on here. Just went live, yep. And sure enough, after open, we continue to see the same type of price action. Do I have it? Oh, yep, here we are. So this is, I believe, after the first open, 30, yep. We are seeing this volume distribution. So we saw a little quick move down, quick move up, but we see a concentration of the volume above, right? So yes, this is still looking like a D-shaped profile, but this is a lot of volume done in the middle compared to the extremes. So what are we looking for as we come up over these two big volume nodes? Is this volume node adding? Is this volume node adding heavy to then make this D-shape cleaner? Or are all these people, if we're pulling above right here, being ran out, and are we getting an explosive move up? And then the same in the reverse. Are all these guys being stopped out and we get an aggressive move? Now, depending on what we see on the tape is how we will approach this. And as we did break or trade below that bottom volume node, we did see the people adding, and this is where I took my trade. Now, I encourage people in the room to not trade this type of action, just because it can be more difficult. You have to be good on the order flow, which in time, with the proper screen time, you can and hopefully will become. But it can be more difficult as we're not getting these sustained moves. You have to play for smaller targets, and that's exactly what I did here. So this was an inflection point that we were watching, as well as other tools. As well as other tools that we use in the room to build confluence. So I was looking to be long down here. I scaled in to minimize my risk. I usually try not to enter all at one price point. Not saying that I never do, but I find it better when I scale in. That's why I like using zones rather than levels to mitigate my risk and have a better stop loss. There are downsides to that, of course. Obviously, sometimes you're not filled your full position or whatnot. But in this case, I was filled the full position. I took 75% off at 5 points due to the rules that I have in place for myself and that what I share in the room regarding this day type. And then I took that last 25% off of my original position at this level. So we can see on the tape there is temporary exhaustion into this moving average, but that's not why I took it off there. I took it off due to what I saw on the tape, as well as some other tools that we use in the room. So even though we have a choppy day because of FOMC minutes, the market is waiting for this news to come out to see where the Fed or how the Fed is looking at the current economic situation. That doesn't mean this is untradeable. A lot of people I see complaining on StockTwits saying that this is so choppy, or they say, we're not moving up, so this is clearly bearish or clearly bullish. A lot of people are very biased on StockTwits, but just playing the charts, seeing what we see on the order flow, we can do what matters. And what matters when we're trading the markets is, at the end of the day, making money. So I have my link. I'll have a link to the website in the description as well, where you guys can join the room if you see the edge in this approach. So that's everything that I posted here on StockTwits. I hope you guys, again, all had a green day, and hopefully I'll see you guys around in the room. But regardless, I'll see you tomorrow in the next market recap. Cheers.